Hi everyone! There's been a lot of speculation about the UK housing market lately and about the housing market in general all over the world. There's been a lot of theories like housing market is gonna collapse in 2023, it's gonna crash all the way down, and the crash is actually gonna be worse than 2008. A lot of investors gonna lose their money, and everyone should get out of the housing market right now while it's still possible to do so. The UK's housing market is struggling much more than the rest of the world and countries such as US, mostly because of the mini-budget turmoil back in September 2022 when it was announced by Liz Truss government, but also such things as cost of living crisis affected UK worse than other European countries, and Brexit, and higher than ever mortgage rates. All of these factors combined brought to the housing market in the UK being in a quite unique position compared to the rest of the world. There are wildly different opinions on what's going to happen with the housing market in 2023. For instance, a 5% decrease has been predicted by Zoopla, and about 22% decrease has been predicted by Barclays. The major question: is it time to panic yet? Is it time to sell all your property investments, whether it's investment in rates, real estate investment trust, or whether you actually own a property? So I want to start with what's happening with the UK housing market right now. And actually about a week ago, Nationwide Building Society published a report where they announced that annual house price growth turned negative. So it was actually 1.1% decline in February year on year. So it's this February compared to the previous February. And it happened for the first time in almost 3 years. And it was also the sharpest decline since 2012. As a result, the average price of property went down to £257,406, and it's about 3.7% decline from its peak in August 2022. But I want to just draw your attention to the fact that it's not the same throughout the whole UK. For example, I live in the north of UK, and housing prices here actually increased over the past couple of months, and they keep on increasing in February as well. So while some areas actually be negative and highly negative in their house pricing growth, some areas are still keeping positive and still growing house prices throughout this year. Housing prices have fallen in February by another 0.5% months on month, so 1.1 decline was year on year, 0.5% is months on months, and it's been falling for the 6 consecutive months in a row. So the housing market is in quite bad position when it's been negative for a while, and it keeps on going more and more negative. In fact, some indicators show there is the most widespread fall from 2009. For example, house price balance indicator, introduced by the Royal Institution of Chartered Surveyors, it measures the gap between the percentage of surveyors seeing rises and falls in housing prices, and this indicator fell to -47, which is the lowest value since April 2009. The interest rates continue to rise month by month, sending the mortgage rates also right to the moon and making it more difficult for the first-time buyers to actually be able to afford their first home and then to be able to afford paying off the mortgage every single month. And this pretty graph right here that looks like perfect exponential is actually the mortgage rates over the past months in the UK. As you can see, they've almost skyrocketed, making it less and less affordable for people to actually get their first home. At the same time that less people are actually applying for mortgage, the number of mortgage approvals have been steadily declining since August 2022 for 5 consecutive months. Obviously, cost of living crisis had a large part in this, because it's now becoming more and more difficult for people to afford the mortgage, and consequently the banks are also being more suspicious whether someone can afford the mortgage in the next 5 or 10 years, and the mortgage affordability rates has actually been changing quite a lot as well. So following this heat, the waves already started to spread throughout the house building industry. Just about a week ago, Taylor Wimpey, which is one of the large house building companies in the UK, announced job cuts that were aiming to save about £20 million in costs just this year. They haven't said yet how many of its staff members, or 5,000 staff members, they're going to lose their jobs, and what's going to happen with them, but they have announced they're going to take these measures just after the report has been published. In the same announcement, the firm also said that its sales rate have fallen by about 40% to 0.62 per week compared to 1.02 per week just a year ago. This should be taken with a pinch of salt, however, because a year ago it's been a housing market boom following COVID. The chief executive, Jenny Daly, said that the Q4 numbers in the early part of this year were more likely the sorts of figures that we saw during the great financial crisis. The stock prices of the other house building company in the UK persimmon has actually plunged by 9% following this report as well. So this means the housing market is gonna crash in 2023 and there is no way out of it, right? Wrong. There are actually other factors that need to be considered, and while I don't know and you don't know and no one knows if the housing market is gonna crash in 2023, we should look at both sides of the coin here. The housing market equation consists of two parts to it, demand and supply, and both factors need to be in exactly the right time and place for the housing market to actually collapse. So the housing market bubble is indicated by high demand when people wanting to get their houses and low supply. In terms of the demand side, the demand has in fact been very high over the past couple of years due to post-pandemic era, along with the stamp duty holiday that's been introduced for the home buyers, for the first-time home buyers, and extremely low interest rates over the past couple of years. All of this created perfect conditions for very high demand for the housing, and people were in fact buying them and buying. In fact, in the beginning of 2022, the number of investors in property increased to 14% from 12% in 2021, and the number of first-time buyers increased to 26% from 24% in 2021. So the demand has been incredibly high, as indicated by many different factors. In terms of the low supply, there were also some reports just recently indicating there is about 4.3 million houses backlog of houses that need to be built to actually match the demand. So here comes the low supply part of the equation. For the housing bubble to actually burst, there needs to be a trigger event when the demand suddenly becomes very low, and such trigger event, surprisingly, was the UK government making the mini budget plans back in September 2022, when the UK economy became unstable and it caused the interest rates to go up. The UK government started increasing them from September 2022, and they're now through the roof, with the mortgage rates also being through the roof and the demand consequently decreasing rapidly as well. By the end of 2022, the number of first-time buyers decreased significantly, and that's what you can call the trigger event that might cause the housing market crash. However, I believe the housing market crash is not going to be as bad as many people anticipated to be, just because we are now more conscious about the acts we need to be taken to prevent this crash. For example, the house building company are actually decreasing the supply now to make sure the market is not actually collapsing, so they are trying to match the demand. The Taylor Wimpey's order book at the end of February comprised of 8,078 homes worth £2.2 billion, decreased from about 11,000 homes just a year earlier worth £2.9 billion. Moreover, Home Builders Foundation announced that house building in England is due to its largest fall since World War II, so the supply is actually going to be decreasing as well. Unfortunately, the housing market industry in general is much less reactive than different other industries, so it's very difficult to rapidly decrease the supply because they need to pause some building sites, stop some contracts, they need to take a lot of different action to actually decrease the supply. But they are doing it now and they are on their way. At the same time, banks have been more conscious with the crisis and the housing market crash that happened in 2008, so they've been better in terms of giving the loans to the people who actually can afford paying off mortgage over the next years. I believe there'll still be a significant amount of correction, about 5-10% over the next year, but I don't think it's gonna proper fall by 30 or 40% because we are now learned, or I want to believe we now learned our mistakes and we're not gonna repeat exactly the same one as in 2008 market crash. So in one of his interviews, Carl McCadell, the co-chief executive officer at the property buying company, which is UK-based leading property cash buyer, has said the following: I think we can expect to see a fall of around 5%, with the worst case scenario being about 8% over the next year, but this will bring the average house price down to levels seen just before the pandemic began. And I do agree with him, so I do think that's what's gonna happen, because the housing market correction has been long overdue by now, and the housing price is now through the roof and they're higher than they should be, they're higher than it's reasonably possible for them to be because of this super low interest rates that's been there over the past 10 years. The main thing to take away is not all housing crashes are the same. So because the housing crash was like this in 2008, and because it was triggered by bad debt in one theory or by bad investor behavior in another theory, it doesn't mean that's going to be the factors that will cause the next housing market crash. we as humans just learned some history of the past and we want to believe that it's going to repeat itself in the hope that we can actually predict the future, which we can't. We can never predict the future, and the next housing market crash might be triggered by a completely different thing, and the actual definition of the housing market bubble that I mentioned earlier might be completely different after the next housing market crash. So I was actually planning to get my first home about this time now or in the next couple of months, but I decided to postpone it for a bit, not for too long though, because people who are waiting for housing market crash, that again might not happen, they are going to be waiting for longer, and there's going to be a point when housing market is actually at its bottom, so it's quite low, but then people are still not buying houses because they're waiting for an actual crash. That's not going to happen, so I think that would be a good time to actually get my first house. Thank you for watching this video. Check out my 2 other videos right here that YouTube algorithm believes you're gonna like the most.